Welcome back onto Corporate Conversations. Then SGS Enterprises, the first management on our radar, and Sanjay Thapar, who is the Group CEO and Executive Director at the company, is joining in, and we'll be basing this conversation on three important points: the strategy behind the MOU with BOE. Varitronics, the incremental revenue potential that the company is expecting from this, and of course the expansion plans for the business going forward. Mr. Thapar, good morning, good afternoon. Thank you for joining in. First off, we start off with the MOU itself, right? How does it fit into the strategy for your company, and how does it fit into your vision behind your rationale behind signing this MOU?
So SGS is a leader in the aesthetic decorative space. We supply virtually to all the two-wheeler and four-wheeler and the consumer appliance OEMs in India. We also have a very tenured marquee OEM customer base across the world. So one of the areas that we were working on earlier for many years, where we have a leadership position, is dials for instrument clusters. Now these dials are now converting to a digital dial, and the display that you have on the center stack of the car, our bet is that this is going to increase, and not only in terms of the usage amongst cars in India across all segments, but also the size of this display. So our original plan a year ago that we communicated to the market was to make the cover glass for this display. But then our ambition became stronger because a lot of other OEMs or tier ones really, who make these information and display systems, approached us to say that, can you go beyond cover glass and could you look at assembly? Now, this being a new area for us, we wanted to have a technology partner with us. And BOE is amongst the top 3-4 companies worldwide, which is a leader in this. And the scope of our MOU is that they will help us with technology to assemble this display in India and also localize some key components like the cover glass and the backlight unit. So that is the intention. Right. They recognize that SGS has a strong position in India and they needed a partner and we needed a technology partner. So it's a marriage of
Got that.
For both the companies.
Right. Mr. Thapar, let's try and quantify this particular opportunity and correct us if you're wrong. Currently, we understand that the content per vehicle that you enjoy, especially when it comes to the four-wheeler, is anywhere in the range of 3,500 to 5,000. Materially, with this MOU signed, now what is the opportunity size that you're targeting and what is the total TAM?
So today, if I talk of the India market, all the displays that come into India are imported. I think almost 99.5% of the displays are imported. There's just one tier one which is doing some assembly work, but the content is all imported. So I think we will be first of the block in terms of localization, not just of the display, but of the components. It falls in line with the vision of the Prime Minister of the country, and we believe that we would be a very strong player here. Now, the size of the market at the moment, I estimate, is about 800 to 1,000 crores, which could grow to be a 3,500 to 4,000 crore market in the next 5 years. We see a lot of tailwinds of consumers buying cars because of displays. That's a very important element in terms of the buying decision of a customer. And today, the OEMs are loading more and more content. So you have the center stack, which is growing bigger and bigger. So instead of a single display screen, you could have dual screens that you see in the likes of the Mahindra XUV 700, or you have the Hyundai and the Kia car, which have large displays, or even the new offerings from Tata also have larger and larger displays. So I think that's a trend that will continue. And then over a period of time, you would see a lot of rear seat entertainment coming in that would also need displays. So I think this is strategically a very important step for us to address this very large and very promising market moving forward.
And any number that you could help us quantify, what will be the content per vehicle with all of these new opportunities that come about?
So I imagine it could be anywhere between, depending again on the size of the screen, you could have a single TFT screen, you could have dual or triple screen. So at an average, I would imagine that it would add about 5,000 to about 8,000 rupees of content to the existing basket that we have, which you said is about 5,500 or 6,000 rupees today potentially for a four-wheeler. Right. So we could aim at reaching about 13,000, 14,000 over the next few years.
And what does that do to your financials, Mr. Thapar? Considering this MOU that you have signed, the revenue opportunity that you're targeting, does that boost your prospects for the full year? What is the kind of margin growth and the top line growth that you're anticipating now for the full year?
So this MOU will not impact the current year FY26 because this investment would take or be deployed over the next 1 year or so. So I think revenues from this should start coming in FY27, FY28. But our run rate for the current year is extremely robust. So at the beginning of the year, we guided that we'll outperform the market 2x the industry rate of growth.
Right.
And we are on track to do that.
Understood that. So a couple of quick questions because we are running out of time. So how is the partnership with Hero MotoCorp going? We understand that you added them very recently onto your clientele base. And secondly, sir, you have quite a lot of exposure as far as USA is concerned. You added quite a few marquee clients like Ford Chrysler as well. What has been the impact of tariffs there?
So first on Hero, so our relationship is progressing well. We acquired them as a customer. We value them. They are the largest two-wheeler manufacturer in the world. So that is good business for us. We've started supplying models to them, and I think we are ramping up. New models are being developed. So that is progressing very well. And we hope to continue to grow our business with them, not just for the products that we've started now, but also cross-sell a whole lot of products that we have in the coming years. As far as the US goes, so our exposure at this moment directly to the US is just about 1.5% of our sales, not too much. We are optimistic or hopeful, as is the rest of the automotive industry, to say that there should be some breakthrough in terms of what we do with the US markets. But essentially, what's important for us is that the technology that we have, India is quite competitive. Cost competitive globally, especially the printing business. So we see US continue to remain a very important and a strong market for us. And we are winning large businesses there. So I think that business will continue to grow for us.
Mr. Thapar, pleasure having you here. Thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year and for this MOU as well. Take a short break. On the other side, Bhavin Shukla from JP Morgan joins in to discuss the key trends driving the global investor interest in India's green economy opportunities. Stay tuned. We'll be right back.
Hey, thank you for watching this on CNBC TV 18. Hope you liked it. For more such interesting news and updates, follow CNBC TV 18 on all the social media platforms.